It is known for its volatility. It's historically been something like 12 times as volatile as the US share market, 15 times as volatile as the Australian dollar movement. So it swings widely. If you think back to 2022, inflation took off, interest rates went up. Guess what happened? Share markets fell 25% in the US, 15% here. Bitcoin fell almost 80%. Then we go into the last little while. Guess what? Lots of share markets are at or around record highs or just off them. Guess what has also gone to a record high the last few days? Bitcoin. And of course, when you see volatility in shares, it often translates to volatility in Bitcoin as well. So it is a highly volatile asset. The basic issue with it is it's unclear what its use precisely is. So that makes it very, very hard to value. If you're trying to value AI-related stocks, this is a multiple times as hard to try and value. It really comes down to people investing in it thinking someone else will come along and push the price up higher. As long as that's the case, they do fine. But it makes it very, very hard to value and put a fundamental justification around it.
Are the ETFs legitimizing it as a currency?
Look, I think they've provided an area of legitimacy around Bitcoin and other cryptocurrencies because several things have happened with the advent of ETFs that can invest in it. Firstly, there's more regulation around crypto and Bitcoin specifically. So that's removing some of the bad actors and the dangers that have applied in the past. Secondly, ETFs make it far easier to invest in the crypto space because rather than go to an exchange and run the risk that the exchange might run off with your money, as has occurred in the last couple of years, you go to your local share market and you invest in the ETF and it invests in ETF on your behalf. In Bitcoin on your behalf. Doesn't mean you won't lose your money, but you won't lose your investment, or if you call it that, in cryptocurrency. You're still going to have all the volatility though. It will just be in the ETF, not necessarily in your exposure to the Bitcoin.
Are the funds themselves pumping up the price of Bitcoin?
Well, I wouldn't say the funds themselves are. It's investor or buyer interest of those funds. So when more people are attracted into ETFs, it's another easier way to get into Bitcoin. They buy the ETFs. The ETFs then have to buy the Bitcoin. So that is helping to pump up the value of Bitcoin, but it's buyer demand which is driving it. So in that sense, it's not the funds themselves.
Some watchers of Bitcoin believe that the price surge of late is specifically linked to the halvening, an upcoming moment where the amount of Bitcoin miners receive for their work is halved. What do you make of that?
I think there's some credibility in that. If you look at the history of Bitcoin, which started around the time or just after the GFC, you've seen several periods where it goes sky high, lots of talk that it's going to the moon, and then it goes through a massive collapse. I think we've seen something like 4 episodes where Bitcoin has fallen 80% in value. But then when the next halving comes along, or halvening, or however you want to call it, it takes off again and often goes, or invariably goes, to new highs. So that could be a factor. And the reason that creates excitement is because it means that the Bitcoin miners, and this is getting into a lot of jargon here, the Bitcoin miners are getting half as much Bitcoin for the activity they do, which of course limits the supply of Bitcoin. So if you've got more people coming into the market on enthusiasm that it's going to go higher, off to the moon, but you've got less supply of Bitcoin. And of course, that's getting less and less and less, and ultimately that supply of Bitcoin will be limited. So that's something that creates excitement around the asset class, but then eventually it gets to a high, could be a long way from where we are right now, and then of course some issues arise again and it comes back down again. That's the issue of the way this asset class has worked.
Last year, the ATO estimated about 600,000 Australians were invested in one kind of crypto or another. You aren't just the chief economist for AMP, but also the head of investment strategy. How would you describe Australians' growing interest in crypto?
Well, to my way of thinking, it's almost as if crypto, and I know I've sometimes referred to it as asset class, but I should correct myself on that one because I debate whether it is an asset. But I think what's happened is that if you go back a decade or so ago, there's a lot of interest in gold. There's always a group of people who think that gold is the safest place to be. And I think what's happening here is that people are migrating away from gold as being that ultra safe asset that governments can't get their hands on, now going towards Bitcoin. So it's sucking money away from gold. It's limiting the upside in gold. Gold itself has gone to a record high, but it has put a bit of a cap on that. And so therefore, I don't find it particularly surprising that it is gaining some following and more people investing in it. But it doesn't necessarily prove that it has a long-term future. If you think about it, Bitcoin was originally put up there as something that we would end up transacting in. It would be the currency we would all use. But that seems very, very unlikely. So therefore, you're left questioning its use case. But what it clearly can be is just something that people speculate in. They used to do that in gold. Now you can do that in Bitcoin.
Shane Oliver, thank you.
My pleasure. Thank you.